Welcome back, FFA aspirant. So, hey, I'm Manisha, and in today's video, we are going to solve one more long question, and this one is from the BPP exam kit. So, previously we have solved a few. So, as I said in the previous video as well, that I got a request from one of my viewers that she is struggling to solve this question. So, for her, I'm making this video. I hope you guys will find this video useful. But before starting the today video, I would like to mention that if you are using the Kaplan and BPP exam kit for practicing the extra question, then that's fine. But please make sure to include the study hub in your preparation phase as well, because study hub is ACCA approved content, so I must say everyone to use that as well in your preparation phase. Okay, so in today's video we will solve the question TONSON, and the question is saying the information below has been extracted from the accounting records of TONSON, a limited liability company, as a 31st October 20x6. See, for the financial statement question or the long question, please make sure to check whether it's a sole trader or the limited liability company. And other thing that you need to check it out is regarding the year in date. So it's 31st October 20x6. All right. Have provided the few of the summary of the laser, like your opening inventory, administrative expense, share premium account, opening return earning value, allowance for receivables, sales, bank, return inward, trade payables, loan note interest, trade receivable, purchase, 7% loan notes, irrecoverable debt, $1 ordinary shares, land cost, building cost, accumulated depreciation. So all of the few, they have provided the summary of this ledger. Okay, and the first question is asking, do each of the following above item belong in the statement of profit or loss as at 31st October 20x6? See, out of this ledger, you need to figure out which will be appeared in the P&L and which will be not. So in the previous question, if you remember, they asked which item will be appear on the SOP and which will be not. So please make sure that you have an idea regarding this classification, as income and expense are shown in the profit and loss, and ALE, that's assets, liability and the equity, are shown in the SOP. So you know the what are the items that are included in the assets, liability, equity, income and expense. I hope you guys are familiar with that. So let's figure out which item will be included in the P&L and which will be not. So first one is inventory at 1st November 20x5. See, this is the opening inventory, and you might have been thinking that in the cost of sales calculation we are considering this part, so it will be shown in the P&L. No, we are showing the cost of sales figure, not the opening inventory. Okay, so that's why it will be not the part of the P&L. Please make sure to have a clarity, okay, on this. Next is the administrative expense. So as it is expense, obviously it will be shown in the P&L. Now share premium account, it is a part of the equity, it will be shown in the SOFP, that is the statement of financial position. Return earning, this one is the opening return earning, so it will be it will not be shown in the P&L, not in the SOFP. So closing return earning is shown in the SOFP, so it's not a part of the P&L. Allowance, again opening allowance for receivable, it is not the part of the P&L, but if question has been says movement in the allowance for receivable, yes, that is shown in the P&L. Okay, but it didn't say the movement, it's also showing opening value, so it will be not a part of the P&L or SOP. In SOP we show the closing value, no? And sales revenue, yes, it's the income, it will be shown in the P&L. Bank is a part of the current asset, so it will be included in the SOP, not in the P&L. Return on inward is a expense, so it will be shown in the P&L. Trade payable is a part of the current liability, it will be not shown in the P&L. Instead of that, it will be shown in the SOFP. We have a loan note interest, yes, it will be shown in the P&L as an interest expense. Trade receivable, again it's a part of the current asset which will be shown in the SOP, not in the P&L. And purchase, yes, it's expense, we will show it in the P&L, right? And next we have a 7% loan at one more thing. You might have been thinking, yeah, you have removed the opening inventory, closing inventory. Now, why you are including the purchase? So basically, the cost of sales represents the your purchase amount, expense amount, right? So that's why we are including it here. Now we have a 7% loan note. It's a part of the liability, long-term liability. So it will be not a part of the P&L. It will be the part of the SOP. Irrecoverable debt, yeah, we will show it as expense in the P&L. Then we have a ordinary share capital. It is a part of the equity, so it will be shown in the SOP, not in the P&L. Land at cost, no, it will be not shown in the P&L. Building cost, not shown in the P&L. Motor vehicle cost, not shown in the P&L. Furniture and equipment, not shown in the P&L. Accumulated depreciation, no, we didn't show it in the P&L. Only depreciation for the year is shown, but not the accumulated depreciation. Okay, yeah, we are done with the part 1 and we have scored successfully 5 marks. So if you have done any of the option incorrect, then in that case you will lose the full marks. Okay, so please make sure to not to perform mistake in the simple questions. Okay, then next we have 21.2 and the question is saying building are depreciated at 5% of the cost, and at 31st October 20x6 the building were professionally valued at 1.8 million, and director wished this valuation to be incorporated into the financial statement. So depreciation charge, they have provided the rate. Okay, and so what will be the carrying amount of the following asset in the financial statement at 31st October 20x6, right? So I have done this calculation for you. Let me show. Yeah, here it is. So this is the brought forward amount. It's just I have copy paste it from the question given. So you can see in above that the cost of the land is 740. See, here they have taken the 30 in the common, but in the answer they didn't say to take the 30 in the common. So this kind of mistake is usually student used to do this kind of mistake in the exam. So please make sure to check the format as well. Okay, so that's why I have taken the full figure, not taken the 30 in the common. Similarly, for the building, we have a 1500 cost, and I have deducted the accumulated depreciation, that is the 360, and that gave me the value of 1.140 million. Okay. Okay, similarly for the motor vehicles, the motor vehicle cost is 240 and depreciation is 80. So deducting this, it give me the net value, which is 160,000. For the furniture, again, I have done the same, that 1200 minus 420 to 420 in order to get the net book value. So this is the brought forward amount. Yeah, it's a brought forward amount. So now we need to charge the depreciation for the year, right? So as the land is not depreciated, actually it is appreciated. So that's why we didn't consider any depreciation for the land. So that's why I have written the 0. But buildings, the question is saying the building are depreciated at 5% of the cost. 5% of the cost mean this is the straight line basis method. So 5% of the cost, you can see I have taken the 1.5 million is the cost and multiply it by 5%. So that's give me the depreciation of 75,000, and deducting it from the this carry forward amount is 1065000, right? So now for the motor vehicle, the question is saying 20% of the carrying amount. That means they are saying to use reducing balance method. So if the question says use carrying amount for the depreciation calculation and 20% of the carrying amount, that means it's a reducing balance method. But if it is say 5% of the cost, that means it's the straight line basis method. Okay. So we simply need to take the carrying value, which is 160,000, and multiply it by 20%. That's give me depreciation of 32,000. And similarly for the furniture, a question says 20% of the cost. So cost value for the furniture was 1.2 million. So I have multiplied it by 20%. That's give me depreciation up to 40,000. So my net carrying amount is 540,000. So these are the value which has been carried. In the financial statement. But the trick is here. I also got confused here, to be honest. While I was like solving this question, I got confused in the building one. Why? Because here the sentence says at 31st October 20x6, the building were professionally valued at 1.8 million, right? So, and director wished this valuation to be incorporated into the financial statement. So, I think for the building, the carrying amount should be 1.8 million instead of 1065, because it's a before valuation, revaluation amount, right? So I really did some research why this has been the case, why the answer has been 1065 instead of 1.8. So still I'm not satisfied, but I'm sharing this the result that I have been seen over there while searching this question. That the question didn't mention the carrying amount after revaluation word. They said like, so that's why they simply say the carrying amount of the following assets. So that's why they have only taken the carrying amount, didn't consider the revaluation one. So that's why they are taking this carrying amount. But don't worry, I'm pretty much sure in the exam they won't like give such kind of question where you need to like which will create the confusion. The question will be very clear, so you guys can the solve. Trust me. Okay. So that's why they have taken the carrying amount. Okay. Okay, so next question we have 21.3, and question is saying inventory at 31st October was valued at 275,000 based on its original cost. However, 45,000 of this inventory has been in the warehouse for over 2 years, and the director have agreed to sell it in November 20x6, means after the year end. So for a cash price of 20,000. See, we know the inventory should be valued at lower of cost and the NRV. Here the cost, NRV, selling cost to sell is 0, selling price is 20,000. So which is lower than the 45,000 cost. So that means our inventory value should be decreased by 25,000. Okay, so decrease by 25,000 means closing inventory value should be decreased by 25,000. It's incorrect. And again, administrative expense include 5,000 which relate to the November 20x6. So this is a prepayment. So we have charged this in the P&L. So our profit might have been reduced by 5,000. So but it is not related to the current year. It's a prepayment. So we will show this expense in the future. So we need to book the prepayments. So now expense will be increased by decreased by 5,000, which will increase our profit by 5,000. Okay. Allowance for receivable to be increased to the equivalent of 5% of trade receivable. See, the allowance for receivable is increasing means the moment of the receivable will be increased, and moment of receivable allowance is increasing means our expense will be gonna be increasing. So that lead to the decrease in the profit. Now, other is that there are wages and salary outstanding of 40,000 for the year in 31st October 20x6. So will the following item will be debited or credited to the profit for the year? Okay, so profit for the year. So the question is asking regarding the profit. So if our profit is increasing, that means we will credit. But if our profit is decreasing, that means we will do debit. Okay, so first one is inventory valuation adjustment. Okay, so closing, as I said, closing inventory value will be decreased by 25,000. But this is for the closing inventory because our asset value is decreasing. So we need to do credit, right? But the question is talking about profit. And you remember in the profit as P&L item, closing inventory is deducted from the cost of sales. Okay, so we have deducted previously by 45,000, but it should be 20,000. So now we will add back 25,000 to the cost of sales. And the cost of sales will be increased, which will decrease our profit. And decrease in profit means debit. Got my point? Okay. So next we have an administrative expense include 5,000 which relate to the November 20x6. So this is the prepayment. So prepayment will be debit prepayment, but credit portion will be the profit. Why? Because we have shown the expense suppose 10,000, right? But it should be only 5,000. So that means our profit has been decreased previously by 10,000. So now we need to add back 5,000. Why? Because this expense are not related to the current year. So our profit will increase by 5,000, and increase in profit means credit. Okay. The next we have increase in allowance for receivable. Yes, our expense is going to be increased because movement in receivable is going to be increased. Increase in expense means debit. Okay. Then outstanding wage and salary. Again, it is an expense, so it will reduce our profit, so it's debit. Next. During October 2006, bonus issue for the 1 by 10 shares was made to ordinary shareholder. This has not been entered into the accounting record. The share premium account was used for this purpose. Okay, so share premium account has been used to issue the bonus shares. So that means share capital will increase and share premium will decrease. Okay. Task 1. Complete this sentence. Bonus issue will TONSON cash balance. See, bonus issue is a free. There is no any cash involved in the bonus issue. It's free of cost, so it will not have an impact on the cash balance. Okay. Okay. Then next we have a task 2. They are asking for the share capital and the share premium. So what will be the balances on this account following the bonus issue? Means once bonus is issued, what will be the balance on this account? So first of all, we need to find the share capital, and share capital value is it's 1.8 million. And one more thing that you need to check it out, the nominal value is 1. That's fine. And 1 by 10, 1 is to 10 bonus share has been issued. That means dividing it by 10 will give 180,000. 180,000 will be added to the share capital. So 180 plus 1800, that will be the final balance that we will show in the share capital. And at the same time, the share premium account will reduce by 180. Okay, so we will deduct 180 from here. So 20,000 will be remaining balance in the share premium. So you need to write the full value 20,000, not 20, because question didn't specify any format. Okay, so you need to write the full balance. Okay. Okay, so we are done with this question. In next video, we will solve IMA 1. So stay tuned with my channel for more video like this. I hope you have enjoyed. So please share it among your friends and have a good day. Thank you for watching.